Been bugged. All right. Hello, folks, and welcome back to another edition of Money in Motion. I am CJ, joined with Monte, as always, and definitely a lot of interesting market action taking place today and tons of stuff that we are excited to jump into and to cover. But I also do want to talk a little bit about kind of Monte and I's somewhat shared trading philosophy that we've kind of come up with or grown to embrace over the past few years. It's funny, we were just saying that before the comment came in. When we were backstage, I thought,
that's
Apex has got my apartment bugged or something.
That's why I was laughing. Is literally we were just talking about it, and you posted that comment. Perfect timing. But what is up, Mike? What's up, Ryan? What is up, UIC now? Hope everyone is doing well. Lots to discuss. But mostly beyond the realm of Bitcoin. Bitcoin kind of flat in the last 48 hours. Like UIC now says, showed some resilience yesterday. But, if the markets turn today, it'll be interesting to see if we can hold that level of 27.2 with another day of red equity market action. So I want to talk about that a little bit. And then, of course, the big trade or the big movement happening in energy. XLE, oil, NRGD, we'll touch all those bases and a whole lot more. So I'm ready to dive into things, but if there's something you'd like to start with, CJ, the floor is yours, my friend.
Yeah, I never said this on air or talked to you about it, but I did text you that I think when the last time I wore the UEC shirt, it was the top of uranium.
You did, yeah.
Funny how that works.
I said I'm gonna start fading your shirts.
All right, well, I'm wearing Gemini today, so I don't know what that means exactly. Gemini dollars going down. Anyways, yeah, so before we jump into the charts today, I was reading through one of my favorite trading books. I usually go through this one a few times a year, and that's Fooled by Randomness. And so speaking to our theme of kind of overtrading or the cure for overtrading, because I would say my greatest weakness, and Monty, maybe you would agree or disagree, but my greatest weakness when it comes to trading is definitely doing too much, and specifically overtrading. And the thing why I think it leads to really bad habits and like just loss of funds over time and allows you to go on like gambler's tilt is because if you're part of what Fooled by Randomness talks about, thanks for putting that in the chat, Monty. Put the book link for anybody interested in that. But it takes the case study of a doctor who has his iPhone and he's checking his portfolio between clients every single day on a daily basis. And, in the long term, the S&P is going to have upward drift. You're going to make money in your portfolio, most likely in the long term if you just hold. However, on a 1 minute increment of looking at random stock prices, there's going to be a 50-50 chance whether your portfolio goes up or down. However, we don't emotionally interpret that as being 50-50. A loss actually feels worse than a win feels good. And so even though our portfolio is trading at 50-50, we have an emotional deficit, which actually leads to like gambler's ruin and overtrading. And so the more you don't look at your portfolio, the less you're going to be tempted by having essentially a slot machine on your desk to want to pull it more. And, I improved a lot when I kind of really embraced that. And, I used to have like 3 monitors. Now I only have 1. And I try to never Well, one of them did break, but that's another
Oh,
story.
it broke, or did you break it?
Both. So yeah.
Yeah, and CJ, you were like I said, one of the big movers today is energy, and you've been talking about energy for months now, and how that could be a good trade. And one thing that I think, and today it's panning out, right? Today that trade finally panning out. One thing that I think is super important for people to understand is that, like, if you define risk parameters beforehand and this setup and you have a belief that a stock is going to go to a certain price or a commodity is going to go to a certain level, then put that plan into motion. You might get stopped out a few times, but then the one time it does go your way, like today with energy, then it makes up for all those small losses as long as you appropriately manage risk. So for me, like, going to the title of this show, we are getting a little bit philosophical here. What makes a trader a good trader is not how or when they enter the trade or at what level they enter the trade. It's what they do when they're in the trade, how they manage risk, how they mitigate their emotion, and how they essentially, are able to take those small losses but still have conviction in the larger picture that their philosophy of trading is going to work out. And I think energy has been a terrific example of that. And yeah, basically that's, kind of my philosophy of trading is, if I have a belief, I'm going to stick to it. I might get stopped out a few times, but in the grand scheme of things, one day like today, NRGD up big. I did take some profit, just to let everyone know, because we did talk about that yesterday. But that makes up for all the times that I was stopped out previously. So,
I
and
don't even think you were stopped out.
I
I was the one who
and I
was being
wasn't. I
stopped
got
out.
lucky on that one. I owe that one to you. I really, in this case, like, you kind of um
Paved the
yeah, you paved the way
paved
for
the
me,
way.
really. Like, you were like, chopping through the jungle with the machete.
Well,
Getting
one of those could have been it,
Yeah,
like
exactly.
it could have.
Exactly.
You
I
don't
could have been
know.
late.
You don't know.
I
So
could have been late. Yeah. But the risk reward looked good. You made a strong case, and I entered the NRGD position, and it has worked out very well. But I know that you can relate to that fact of, like, getting stopped out of the trade, even though you still believe firmly that it's going to head to lower levels. You get stopped out. You get stopped out. But as long as you keep that conviction, um, it tends to work out in the long run.
yeah, so crude and heating oil. I mean, there's a couple of reasons for why I wanted to bail on this trade, but I mean, this week it just ended up looking better and worth taking. But it was something that was crowded for a very long time. Heating oil usually more so than crude, especially earlier on. But just to walk you through some of the times, like after this candle here is when I shorted, was in profit for a day, came back to break even, stopped me out, tried again the next day or the next red candle. Very similar thing happened, came down but stopped me out. And I think I had a little bit of a paper cut loss here, the final one where, comes down and then stops me out. But and then you also had those reasons like one, first and fundamentally, lowest crude inventories in like 40 years, which was probably a good enough reason to bail. But also the fact that COT and the way that we interpret this data, like the energy market is the least effective market for it over time. But if you can manage to only lose like maybe 20 or 50 or 70 basis points on each one of those like attempts, you should also read the book Hedge Fund Market Wizards. In the first chapter, Colin O'Shea talks about this, how sometimes he'll be stopped out of a position like 2-3 times, even 5 times, because he says he's a self-proclaimed chicken when it comes to risk. And the older I'm becoming, the more I can relate to that particular idea. But that's the whole concept, is like even if you're wrong in the short term, if you stick with it and manage risk accordingly, you can still get back virtually all of it, on a day today, like today, where you have very outsized moves in not only heating oil, but also XLE. And then let's look at NRGD.
Oh, that link I tried to post the link, but it's too long. It got split up. Oh, let me try and copy a cleaner link.
Anyways, that's a lot of Monday morning quarterbacking anyways. But we'll get to some real setups, I promise. But it's just kind of the process. Trading it can be an emotional deficit, and it can feel like a constant struggle, but somehow you're up at the end of the year. So that's kind of how it's supposed to feel to a degree.
Yeah, that emotional deficit is very real, and it's prevalent in all of us, whether or not we realize it. And it goes back to the joke of the week. The best performing Fidelity investors were dead. I think that tells you everything you need to know about, what the best strategy for success is. It's upward drift in the equity markets. But let's move on to some Bitcoin real quick. I did want to just briefly mention a few things. Right on the day now, after what has been kind of a lack of volatility in the last 48 hours, volume coming down. If we look at the Trade the Chain dashboard, you can see that the total market cap is coming back down. And, with that, sentiment has fallen back from bullish to neutral. So a bit concerning there. And Nick highlighted it, but the level of 27.2 here, highly critical level for Bitcoin. You can go basically all the way back here and see all the supply absorption that occurred below 27.2, before we finally broke down. This is a highly critical level for Bitcoin. And if the equity markets do go red on the day, which is looking like that's how it's going to pan out, it looks like we're going to have a red day in equities just based on what we're seeing here. Although the dollar is kind of throwing a curveball into that thesis with it being, down. But I think that has more to do with oil and energy prices than it does with equity prices. Do you have any thoughts on that, CJ? And why, and maybe why we're seeing dollar down and equities down?
Yeah, no, it's very perplexing, and this is why I always try to say nothing's like absolute. It could just be that the dollar bulls are taking profit today, or people are looking for other means of exposure. But then you also have gold down as well, and you have the precious metals like silver
Right.
falling off more than 1%. So I don't know what to make of it, to be perfectly honest with you. It's chaotic, and it could be random. So
Yeah, fair point. And basically it doesn't really matter why. I think just as long as you keep an eye on this 107.2 level, if we break above that level, I think we see equity markets hit very hard. But if we kind of pull back here or just float around this level here, then equity markets will probably, what I would imagine, is kind of consolidate towards the lows here, at least for some time, until we see more directionality from the DXY. Rates still, not much to say about them other than the fact that they're continuing to grind higher, and I think they will continue to grind higher as well as the equity markets turn down. People look for a place to park their capital. The TNX tends to be a benefactor of that. What are your thoughts on the TNX, CJ, or just rates in general?
well, the consensus seems to be buying TLT in the anticipation that the Fed will
Yeah.
have to lower rates because of they break something. And you've seen record levels of inflows, this one as well as EDV. I'd love for you to pull up EDV. That's the Vanguard extended duration Treasury ETF. And you can see the levels of volume are quite profound. But I don't think that's not indicative of selling necessarily. Obviously it is, because every seller needs some type of buyer. But there's a lot of like equity inflows to these fixed income assets in the anticipation that rates will be lowered. However, you have to make the argument that the inflation issue, while inflation has come down a lot, it's not completely solved. Like, we still do have inflation above 2%. That's, it needs to still come down. And until the Fed raises rates, like, I don't remember when we used to say, don't fight the Fed. It feels like a trade that's fighting the Fed to me.
You're right.
And it's too popular for me to like it right now.
Yeah, I get that same feeling. A lot of talking heads on CNBC saying, that, okay, this is where you want to go if the Fed does this. That's dangerous when there's, like you said, it becomes a very popular trade. And it does very much feel like you're fighting the Fed when you're taking on that position. So that's not something that I am looking to do here anytime soon. But are there any commodities or, obviously you touched on the precious metals briefly, gold and silver, the Yukon Cornelius assets. Anything in the commodities market that's catching your eye here today?
Yeah, I think ZL is about to make new lows. That looks quite weak. Soybean oil specifically. Yes. I'll bring up that chart. Nikkei is one we talked about earlier in the week that is really flushed longs out. I think we talked about that maybe yesterday's show or the day before. But yeah, I mean, just looking at that EMA, it's really been a nice indicator that has really been just a consistent trend line, or, well, not a trend line, but like a trend level for the momentum of this downtrend and what we're seeing. So there's really nothing to do for me here. Are you still in this one, Monte?
I am, yeah. Full disclosure, I do have a short position in ZL, and I haven't touched it. Just sitting on it.
Yeah, so I mean, we'll see. Maybe we get a bust cycle of like 45 to 50 in ZL in the next year or two. That would be nice, and you can just do trend following with a small size position until then, as like a more portfolio position. That's what I would looking at it as, like inverse investment. Yeah, cocoa not doing a whole lot, just still on the breakdown level.
Yeah, right.
But I expect that one to continue to those two blue levels lower down. I just think with, like, if equities don't get a bid and you're seeing de-risking, and what I said yesterday, when you look at gold and things like the dollar and rates, it's indicative of liquidity kind of just being sucked out of the system. And I think that will be enough, if it continues to occur, to ultimately break the back of cocoa and all of these softs that have really been having incredible years. Orange juice is still making all-time highs and was not crowded, interestingly enough. So, but yeah, I mean, if the equities have topped for the year, then I think that should be a good indication of confluence for risk off price action in ZL, and also things like cocoa. Nikkei has now officially retraced to its previous level.
Wow, that was fast.
Yeah, it's this is the power of crowded trades. When they come, they don't give people a chance to get out usually. So that's about all I have to share. What are you gonna say?
I was just gonna say that was such a crowded trade. It's funny to see that velocity of movement.
Yeah, and I mean we're gonna see the same. We basically have seen the same.
Yeah, it looks the same.
And the funny thing is that the chart's positioning are virtually identical. When you look at a lot of what people did in ES, they bought into the highs, like what we said on Trading Rebellion the other day. Right. Although I didn't quite say that.
Yeah, you did.
Well, I stuttered a bit, said the wrong thing. Ended up being a pretty funny joke or takeaway, if anyone caught that. Anyways, and now, like, people are, those same people who bought into the soft landing narrative. This is what it's funny. I was going to mention this. We were talking about the soft landing narrative and how
Right.
people think it's not going to happen anymore. That's just because price is going down, and like rates are going up. When prices were going up, the soft landing made sense. Like it was going to happen. So price, or I should say sentiment, follows price. Sentiment and narrative follows price. And that's just what we're seeing for like the millionth time here, it seems.
Yeah, it is so funny how that soft landing narrative has basically evaporated as price, goes down. It's like on the way up, everyone's like, "Oh, it's gonna be a nice soft landing." Everyone's optimistic. We're innately optimistic about the markets, and we expect that upward drift. And I feel like because of that, people are, when the market's going up, they're like, "Oh, soft landing. I'm okay to buy here and perhaps sell later." Obviously, now sentiment has changed, and a lot of people are not expecting a soft landing, myself included. I think that we will see some pretty rapid negative price action in equities over the next couple of weeks to months here. So, yeah, that's all I got for today. As always, thank you guys so much for watching. Thank you for all the participation in the chat. We really, really appreciate it. And if you enjoyed today's episode, definitely head over to tradethechain.com. You can get a 14-day free trial. And don't forget to hit that subscribe button and hit that like button. Definitely helps get more eyes on the video. But like I said, you can head over to tradethechain.com, 14-day free trial. You get access to our sentiment dashboard where you can see what's hot, what's not, what's trending on Twitter. You can see what's, stablecoin inflows, that sort of thing. And then also you get access to the Discord where myself, CJ, Nick, Alex, and all the others are, ever present and always willing to help and answer questions. Also coming very soon, we have an options education curriculum that I think you guys will find very useful. So, yeah, that's all we got for today. Thank you guys so much for watching. Have a great rest of your day. Happy trading and take care.